Alrighty, guys. Well, I appreciate everyone for tuning in. Today we are going to go over my three strike and you're out rule. Now I'm going to go over this and then I'm going to show certain live examples. And remember, this can be used to the long or the short side. It does not matter. Honestly, it doesn't matter what strategy you are using. This is just a rule that I have found. Now, a few things about this rule is I use this rule on the generally on the 1 minute time frame. Okay, 1 minute. Wicks count and last one is do. Okay, so a few things. I use it often in the 1 minute time frame. Wicks count, and you do not always hence need three strikes. A lot of guys or traders will think of the three strike rule, and when it taps a certain resistance line, they assume that it needs to retest a certain resistance or support three times. It does not need to. Okay. For example, basically, if I'm trading now, the one example that I'm going to show you is actually it was a short trade I took on GMVD. Now this was a support. Say it was, I don't know, 575. Okay, I don't remember the exact. I think it was around there. Now at 575, my goal is I want to see it break through. Right, I want to see a profit. I want to see a breakout. So what happens was it came down, tested it. I'm fine with holding through it through stocks testing. Every position that I'm in doesn't need to be straight down or straight up. That's just not how stocks go. So I was fine with holding through a pullback. Now it came down and tested again. Now creating what we call a double bottom. I kind of started to sweat a little bit as it bounced a little bit more to the upside. Now, one thing I'll let you know is if it takes that high of that bounce, you immediately will need to stop out because more than likely that's going to create a double bottom. And I'll say it gets rejected by that again, but then tests 575 for a third time. Well, 1, 2, 3 strikes, you're out. It's more than likely if it starts bouncing, it's more than likely going to continue in the opposite direction that you want. It's very common. Again, this can be used for support and or resistance, and I'll draw the resistance real quick just to show you guys. And if you guys do have questions, I think there is a chat. Yeah, there's a chat part on here. So if you guys have questions, feel free to leave them and I'll see them. Don't throw them in the Discord. I'll probably miss them. Now, same exact thing. Resistance at say 150. Okay. I'm trying to trade the breakout at 150, buy at 145, comes up retest 150. I don't mind holding through micro pullback, but it double tops and I get a little bit nervous. Usually I'd sell in that area. Let's say it kind of just has one more little micro pullback and the test a third time. Remember, these can be wicks. These usually are three separate 1 minute candles. It's the same 1 minute candle. If you see on the tick chart, if it's the tick chart's doing this and it bounces 150, 150, 150, but it's all in like 5 seconds. That doesn't constitute as a three strike rule. That's why I like to use a 1 minute time frame. MGS 7 to 17, yeah, now, and if it gets rejected, generally, if it taps three times, I have to stop out for either a small profit or maybe a big profit or a small loss because more than likely that's going to reverse. Now, does anyone have any questions on the three strike and you're out rule before I go and show live examples? Remember, three strike and you're out rule, I like to use it in the 1 minute time frame. It does not have to tap the resistance line three times for me to sell. I want to drill that in your guys' brains because a lot of you guys will think, oh man, it tapped it once, got rejected. And as soon as these hits the resistance line, you guys are like, don't worry, Jason told me it'll tap three times, it'll tap three times, it'll tap three times. No, it doesn't need to. But if it's holding at that resistance or support maximum, I'm going to allow it to tap three times. So after three strikes on the support resistance, that stock will likely head in the opposite direction you want. No, generally I don't want. So, for example, in the short analogy, I was actually short right here. Like I was betting that the stock was going to go down, and then it bounced, and then I held through that bounce, and then retested, held through that retest again, and then it started to make another low, seeing if it could break below this pivotal support line. Say this is $1, and the stock no longer meets compliance. What's going to happen is the stock's going to continue to go down more than likely. So I want to be able to hold as long as I can, as long as it's testing. I'd like to see it hold, or I'd like to see it break. But if it continues to hold, then I have to stop out for a small profit. So say I started my my entry right here. I would need to stop out either right at this level as it starts to curl back up, or if it takes higher highs in this channel. Generally, what happens is the second I see, say this is $1, I see $1, then back up to 105, back down to $1, back up to 103, back down to $1. If I see 101, 102 start to print again, I generally stop out. So the three striking route rule generally is a good thing. It means it's going to bounce in the direction I don't want. So this is what I was actively shorting. GMVD. It had 1, 2, 3 5-minute pullbacks, and it broke below this ascending support line. Quite literally a picture perfect setup. And it came up to retest the $6 area twice. And after it failed to break 615 twice, I started a short. Now, this was kind of almost a 3-minute rule. You can see 1, 2, 3, but it broke below it. Okay, I started my short right here at around 595, and then it continued lower. But if I zoom in here on the 1-minute time frame, this tested this 564, this 560 support line a lot of times. Now it doesn't have to like directly tap it at the exact level, as long as there's not a clear break. Like for example, on this one, there was just a clear break. There was no clear break in this one. It tapped it several times. 1, 2, there's several strikes. I held through this kind of first and second strike, came up, retested, third strike, came down, or came up, back up again about 10 cents a share, came back down, retested, and then I'm like, okay, I gotta stop out, and then rallied. And that was a solid rally from 565 up to 680. So that's exactly what that rule looks like. This is where it actually came out in my favor, where I held through the third retest and it broke and it continued lower. But then here's where it actually held for the three or four times and then continued much higher. And you could see a lot of the 3-strike rule happen a lot throughout the day. But that's simply what it is. Let me see if there's an example on any other trades. For example, I mean, right here, wow, it just took high day in front of us. This Monkey Hall's going up. If I am looking for a break of that 950, it tapped 950 once, twice, 3 times, got rejected, and then actually on the 4th time it curled back up and continued to break. Now, would I have traded that? I can't say for certain. If it has a 3-strike rule and then pulls on back a decent amount, then maybe it's almost like a reset, repause, okay, play button. That just got halted in front of us. Wow, it's crazy. Oh, it didn't. But if it's just having little 1-minute micro pullbacks like it's having up here, I wouldn't trade it. It needs to have a decent sized pullback and almost like a breather period, a point of consolidation, and almost like a new move for me to want to trade it. So that's a 3-strike rule. You can see where it plays out in the upside and to the downside. Now, remember the stock has to come up and at least test near it. For example, if the level is at 950 and it tapped 950, pulled on back 930, and then pushed up to 940, that's not really. It's still 10 cents away from 950. I wouldn't count that, but like a 948, 949, I would. So there's a little discrepancy in that area. I would say anything under 0.5%, I would consider a test. Anything over 1%, I would not consider a test. So if it like hit in that area, it'd be 941. I would not count that as a 950 test. I just wouldn't. But that's insane. That sucks that I use my day trades. I'm not that. What a 5-minute pullback. All right, team. Well, I'm gonna head out for us today. Enjoy your day. I am in the red a little bit on my small count. But I say it like always, I absolutely love what I do and I want to change it for anything. So gonna regroup, refocus. If I do have another red day Wednesday, which would be like 4 red days in a row. Not that I'm having monster red days, but I will need to step away. Just as competitive as I am, I need to, take some time off to review my trades. I know what I'm doing. Maybe even get back in the sim for a little bit, just to rebuild that confidence. That's it. That's about it, guys. Appreciate you. We'll talk to you guys first thing tomorrow morning. DM me if you guys have any questions throughout the day. Here for you guys' success. All right, team. Have a good day.